Hello and welcome to the beginning of the week and welcome to another edition of Stockwatch. So today we've heard that Apple and GM have invested in a brighter, greener future, so it seems. So Apple have started off with a $200 billion investment fund designed to remove carbon emissions from the atmosphere and support sustainable forestry and to generate financial returns, of course, for the company. So how will this help Apple's profits in the long run? So the Restore Fund, which is what it's called, will generate returns by investing in development and conserving sustainable working forests that both remove carbon and the atmosphere as they grow, and also produce trees for building materials, paper, the packaging that Apple actually uses time and time again. Excuse me. So Apple's Vice President for Environment, Policy and Social Initiatives, Lisa Jackson, said in an interview recently that all of the changes that are being made are not just because the corporation wants to give back to the planet, but obviously they're good for business as well. So, you have to think that Apple are heading in the right direction with cutting emissions as much as possible, but it is for their own financial gain as well. So we'll just see how much this goes down with its opposition and its own consumers as well. And also sticking with the green energy theme, we've got General Motors. They're teaming up with LG and they're planning to build a new $2.3 billion plant to build batteries for electric vehicles, which is a key step towards General Motors' initiative to go greener and to cut to cut all gas powered cars by 2035. So, virtually all automakers are following suit in this greener energy field. You've got Volkswagen that are leading the way, as well as Tesla. Obviously, they're the big names that are in the industry of cutting as many emissions as possible. So the only thing is that electric cars have fewer parts than gas-powered vehicles, and therefore can be cheaper to build and with less labor as well. But there is a looming shortage of the batteries needed to power the cars, because so many companies are going in that direction, that there could be a possible shortage of the batteries that provide the energy. So you have to think that the lack of inventory could put upward pressure on costs and drive electric vehicles higher than what they were anticipated to be sold at. So this will be an interesting development if it does come into fruition, that batteries will be a little bit scarce. So let's just take a quick look at Apple first of all. So what I'm seeing here is we've had a bit of upside momentum. We've gone through the Ichimoku cloud and now we're looking that bias is on the upside. However, I'm just looking on the recent RSI and I'm just seeing a slight divergence in prices. So we've got higher highs, lower lows here, and this could weigh down on prices slightly. So what I will be personally looking at in the next few trading sessions, we've got this top here of roughly the top end of $130, and if we do bounce off this line, if prices do start to wane, then naturally my next target will be the top border of the Ichimoku cloud, which is a nice confluence of the $130 zone. So if that does happen, I'll start expecting to see prices wane slightly and then fall into the cloud. If we do get cloud engulfment, then this will be a very good sign for sell positions to be put into the market, as prices could move down lower. And then I'll be looking at these bottoms here, depending on the headlines and everything. Obviously, we've got earnings season going on as well. Lot of headlines coming out for a lot of the big market players in the US stock market especially. So this is just a few things that I'll be looking out for in the next few trading sessions. And just a quick look on General Motors as well, as we just look into the back end of things. So General Motors, the last time I looked at them, we had this bearish divergence that I was looking that it was going to start waning downwards, and it looks like it probably will start doing that. We've got this kind of $6 to $7 to $8 gap in the market from the recent top and the recent bottom. Prices are on the way down now slightly, so naturally I'll be looking at the top border of this Ichimoku cloud for engulfment as well, like I usually do, and then probably a sell position into the lower quadrant of the $50 range. So this is very, very significant. And then we've got this strong, purposeful lower border of the Ichimoku cloud as well, just under the $50 range as well. So things are looking like they're going to go on the downside for General Motors in the next few trading sessions, unless it can consolidate and hold above the mid-range of the $50 mark. We'll see if that transpires. But just a few things to look out for as we go head first into the earnings season, and obviously as we start the trading weeks. That's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or queries, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.